All right, gang. So, what a Friday, huh? After starting off with a vicious morning, overnight just really hit the markets hard with that China news. And then we had the bad job number. And guess what? It was ugly for the first half. Today's show, let's start off by talking about the disclaimer, though. I want to make it very clear here that, we are independent traders. This show is for entertainment purposes only. Nothing in this show is an offer to buy or sell any security. We are not registered investment advisors. Always consult a professional before making any investment decisions. Now, anytime we talk about a chart or a stock or anything like that, that is our opinion. That is not a buy recommendation. That is not us saying you should rush out and get some. Okay. So let's all be very responsible for our own trades. And remember, this show is for entertainment purposes only. So let's get started. The stocks post 5-day losing streak. So this is the worst week of 2019. CNBC, they love the drama. We are in the 10th week of 52. So not a whole lot of data to work with there, CNBC. But it's true. That is the worst week of the year. It was kind of a weird day today, too, right? Let's pop over to our charts and take a look at our S&P 500 chart. You can see we're still in that Fibonacci channel between 61 and 78%. And that's all we seem to be doing here is there's a lot of supply going back to when that big debacle of December happened last year. And you can see it's taken a lot of work. Now, we took our first shot at it a few days ago and we failed, but it looks like the market got some good support. You can see after all that really rough day, got a nice green bar there. Let's go to a shorter term chart, a 5-day chart. And you can see we were watching it here when it was starting to build a channel. And that's where it kind of came off a cliff yesterday in the morning. You see that gap down. Then we had another gap down today. But that's a nice close there. We had a nice strong close. Those last 15, 20 minutes were really, really strong. So we think, the way we're playing this is we're still bullish on this market. And, you start getting news like you got this morning, and then you get a strong close like you did today. That shows a lot of resiliency in this market, and we're playing it that way. So we're still bullish. We're still long AKS. Actually, we added another layer in AKS today. We bought some $3 calls going out to July. So we've already got some $5 calls all the way out to next year. We had decided to add an extra layer with those because we like the way this stock is basing. If we go to a year chart, you can see we've kind of put our line in the sand there, and we got a nice bounce off that today. A lot of collusion going back there. It just came off a little bit of a run where it was pushing over $3 and looking like it was heading for 4. But there's just too much to compete with in this market. So it's like I said, it's an interesting day. So we added that second layer here. Again, we're trying to stay ahead of the trade. We want to buy on soft days and these little pullbacks, and we want to sell into rallies. And that's how you do it. So let's pop over to our retail play. Our retail play had a little rough day. You can see on a year chart, we're still flirting around that 50% mark. But you notice how a lot of these charts are really starting to look the same, right? A big old V with a big old handle on it. Now that handle is going right to the bottom of that, the support from when we had the big sell-off. So a lot of stocks got to do a lot of work going forward. So we'll see how that shakes out. We like XRT. We're out to summer on this one, and we're not too far out with some $50 calls. Twitter, we're still playing Twitter, and we're still waiting for a move. Twitter got a little beat up today. It was a little resilient. It had a decent day, but it still closed down about 0.25%. We're waiting for that breakout on Twitter. It seems to be doing a lot of work around that 23% level. We'll see how this plays out. We've got some options expiring on Friday on these too. OIH, we're still playing oil. Little disappointing. We broke off that handle. Ran right to that line there. So I think we're okay, but a little more of a pullback than what we have liked. But considering what went on with oil today, oil was another one, right? The end of the day, it really pushed up and it didn't look as bad. It was down 1% for the day, but it could have been a lot worse. It was down about 2.5% in the morning. It's just a good recovery there in the end of the day. It shows a lot of people just kind of stepped back when that selling was happening in the morning, didn't get involved in that madness, kind of like what we did. And and towards the end of the day, they staked their claims, they planted their flags, and they took up their positions for next week. We're still loving GE. GE got a little beat up over the last couple of days. That's when TUSA, the analyst, came in and started attacking the stock. But we're still staying with this play because we like GE. We even bought a little bit of stock. So, and it looks like we're being rewarded for that. So good job. Let's close off with the S&P 500 here because it's inflection time. You know, you hear that word, inflection time, but right now it's 2,800 is the big battle. We think it's about 2,815. We'll see how this works out going into next week. Again, remember, we've had a lot of bad news over the last few days priced into this market. A lot of, previous to that, a lot of recession talk. Now we're getting the earnings slowing talk last week, and now we're getting into this China slowdown, global slowdown. So let's see how resilient this market is. We're still keeping a bullish position. Like we said, we're long on steel. We just opened a long play on steel. We're long on retail from last week. We've got a nice cloud play going on that we're playing some options all the way. We played some leaps on those, and we got a nice recovery play with GE. So look, gang, the news cycle was pretty quiet. Besides the political BS the normal political BS, let's do a little refresh here. So get a nice clean updated page. And you can see really the only thing they got to say is the 5-day losing streak, worst week of 2019. So have we set the bottom? A little too early to ask that question, don't you think? But there's some good information on CNBC today. If you guys got some time, we posted one of the articles on our Investing Lovers page about high yielding stocks. You know, when you're trading those options and stuff out there, gang, what do you do with the rest of your portfolio? Do you just leave it in cash, or do you keep it working for you? Our members keep it working. And they do it very effectively. And part of the answer is in that article. So look, gang, you guys have a great weekend. It's Aloha Friday. It was a fun week. We did a lot of educational stuff in the program. If you want to get involved, if you need some support and you need some guidance, click the link in the description. Also, while you're down there, make sure you read the disclaimer, okay? So you guys have a fantastic weekend. We will be back Monday after the market. It was a lot of fun. It was a lot of good portfolio building this week. And during these little pullbacks, that's what you want to do. Okay. So have a great weekend, gang. We will see you on Monday. All you Hawaii residents, don't forget, Monday is daylight savings time. The market does not open at 4:30 a.m. now. It opens at 3:30 a.m. So set your clocks appropriately. All right. Or accordingly, excuse me, wrong A word there. We'll talk to you guys on Monday. You guys have a great weekend. This is the WIRA Market Update. Thank you so much for joining us.